Hey, 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 my financial besties. How you doing? How you been? Y'all getting used to that little jam? I love the little bop. I love the little bop. How you doing? How you been? It is Friday. Happy Friday to you. Good evening to you on the East Coast, and hello to you wherever you are in the world. I am still currently in Malaysia, but in a different location than when you saw me earlier this week. I'm currently in Penang Island, Malaysia, hanging out here on the in the beach area for a couple of days, checking this area out. But if you're joining me live, y'all know the routine. Drop some money babies in the chat. Let me know how you're feeling. And if you're watching a replay, hey girl, I see you too. Comment, replay gang, so I'll know you were here. And shout out to my channel members. I'll never forget you. Shout out to my channel member besties and the VIP besties. I see y'all. I see y'all. And I see the money babies in the chat. I appreciate that so much. In this video, I want to talk about stock market crashes. Let's go and get into it. I want to talk about stock market crashes because if you are an investor, you already know the stock markets all around the world took a nosedive this week, right? I'm in Asia and I trade futures. So I watch the Asian markets take a dump in real time. Japan took a dump like 12% in one day. And the European markets followed. And at that point, I expected the US market to do the same. So y'all know I was in position and ready. And sure enough, at market open, the US market gapped down and I was ready to eat. I was ready to eat. So that type of market activity is fun for me, but I can understand why it would cause a lot of people to panic. And I imagine it probably makes you afraid of losing your life savings. So I wanted to do a video. Let's talk about it. Let's talk about stock market crashes. And what do you do during a stock market crash, right? If you have any questions about stock market crashes, go ahead and put them in the comments. Put them in the comments, and we're going to talk all about stock market crashes in this video. But before we get started, if you are new to me, hey girl, hey. My name is Malika. I'm a money coach and the founder of Fabulous Financials, my coaching company. I was a single mom on welfare for almost 10 years. But after learning how to invest in the stock market, that was my path to freedom. And I was able to retire early in my 40s. So this is why I talk about investing in the stock market so much. So now that I'm retired, I like to spend my time helping other women learn how to navigate the stock market. It's not a game. It's not a place like Las Vegas where you go gambling. I hear people say all the time, oh, I want to play the market. The stock market is not a game. So I help women learn how to navigate the stock market without fear, and invest and grow your portfolio with ease. I'm sure you've heard all the complicated ways of investing that cause all types of anxiety. What I help women do is learn how to invest with ease. I could say lean into your feminine, because we don't have to do it the way the men do it. It's not as complicated as the finance bros make it seem. If you subscribe to my channel, you'll see what I mean. And if you want to become a client, the link to apply will be in the description of this video. So welcome, new bestie. Now let me say hello to my OG besties. Hello, hello, friends. How you doing? How you been? Let's see who's with me on this wonderful Friday. It's actually Saturday morning for me. Hello, Miss Greta King. How you doing? How you been? Hello, Miss Janella. How you doing? How you been? Miss Venus. Yes, all my OGs are in here. I love to see the repeat names. Hey, Miss Venus. Hey, Tia D. Hey, Dominique. Oh, and there's quite a few besties that have either taken my course, the Your Road to 100K, or you are in my Invest with Ease group coaching program. I love to see you. I love to see you. And the fact that you're still here is just evidence. It's just evidence that you have learned so much from me. And I hope you're investing and making your money babies. Hello, Miss B. Hello, Black Women Build Wealth. Hello, Tanya Brooks. I love the money babies. Thank you for circling back to your D and dropping some money babies for me. I appreciate it. Yes, yes, yes. Yes. Let's see. Aw, hello, Miss Raven. How you doing? How you been? She said, I'm so grateful for my coaching sessions with you. The stock market dipped, and I'm like, investing time. Yes. Yes. I love it. I love to hear that feedback from the clients, from the besties that have become clients. What's up, Shalonda King, VIP besties? The market is making me realize how much I don't know. Interesting. It's so interesting coming from you because I know you're also a trader. So that's very interesting to hear you say that. Let me know in the comments. What do you think you don't know? Sometimes you do know, but you need some reassurance or you just need confidence or validation of what you see, especially if you're looking at the charts. Which, by the way, I'm going into my bag in this video. I'm going to share some things in this video that I don't usually share on my channel. I'm going to share some things I usually reserve for my coaching container. I'm going into my bag, so y'all better bring all the love. Y'all better hit the like button. Y'all better share this video. Y'all better start pulling out them super chats. I got super chats. Did y'all know that? I'm going in my bag this video. I'm pulling out the charts. Yes, I'm going to show y'all how to look at charts when we talk about these stock market crashes. But yes, Shalonda, let me know what it is you think you don't know, because I bet you do. I bet you do. You probably just need a little reassurance to build up your confidence in understanding what you're looking at. Yes. Hey, Jan DeBest. That's a new name. Hey, new bestie. You finally caught me live. Oh, and you always watch the replay. Oh, thank you. Thank you so much. Hello, Tammy. Good evening or good morning, wherever you are in the world. Where are y'all in the world? Let me know. Hello, Gwendolyn Smalls, a name I have seen before. Good to see you again. Hello, we don't retire, we ascend. Good to see you. And hello, channel bestie, VIP channel bestie, Miss Jackie. Miss Jackie is in the house. Now, since my VIP besties are here, that's my sign. We need to get started. Yes, and hello, Miss Sabine. I see you. I see you and I appreciate you. So what questions do y'all have about stock market crashes? Let me know in the comments, right? So what I want to talk about specifically, as well as answering your questions, when the stock market crashes, do you go completely risk off? You take your money out of the market and you just focus on saving your money? Or do you continue investing? Let me know. What do you do? So leave your stock market crash questions in the comments, but also let me know, what do you do when the market crashes? Are you completely risk off? You're like, I ain't about this life. Or do you stay in the market and continue investing? All right. I want to talk about the pros and cons of both, because I understand why some of you would do one or the other, even if it's something that I wouldn't do. I understand why you do it. So I want to talk about the pros and cons of both to help you make informed decisions during market volatility. All right, that's what we're going to get into. Risk on or risk off? What do you do? Let's see. Okay, so most of my besties are on the East Coast. All right, New York. I see Atlanta. Okay, I see Another New York. Hold on. The chat started moving too fast. Albany, New York. Okay, we got Jackson, Mississippi. I see you. I see you. Okay. And Miss Jackie, there you go, sis. It's a sale. It's like your favorite retail store. The stock market is my favorite retail store ever. I'm not a shopper. Like, I don't go to the mall. I don't buy clothes a lot. Y'all see me wear the same old thing over and over. It's fine. I don't do a lot of shopping, but I love to shop in the stock market, and I love a good clearance sale. I know y'all love clearance sales. Y'all know y'all be going to Target and looking for that red label, that little red sticker when it's on sale. But yes, let's see, Shalana, she said, I think, let's see what my VIP besties concerns are. I think I just need a reset and to go back to paper trading for a while. Okay. Also, I need to get my reps up. That sounds very similar to a conversation we've had in the past. Are you finally ready to start listening to the advice I give you? Yes, you need to get your reps up in when you're paper trading and back testing. Yes. It's all about consistency. And the more you see it, the more evidence you have of what is typical in the stock market. And the more evidence you gather, the more confident you become. So the reps are very important. So I'm glad you're aware of that. Good. Okay, so you're responding to the last question I asked. So you continue investing, Miss Greta King. Awesome. Jan the Best says she never pulls out. Awesome. I keep at least 10% in cash reserves. Yes. Okay, so look, I ain't got no scaredy cats in here. Miss Dominique said I invest more. Never sell. Okay. Look, apparently I didn't know my audience as well as I thought I did. Y'all ain't playing. Y'all are not playing. Miss Dominique is from Dallas, Texas. Okay. We don't retire, we ascend. I'm staying in so far, but not sure where to invest at the time. Okay, what do you mean not sure where to invest? So you're in and you're staying in. What do you mean you're not sure where to invest? What do you mean by that? I don't know your first name, but I see your name often. I wish I knew your first name, so I'm not calling you We Don't Retire, We Ascend. Venus said she used to pull out of the market after taking my course. Okay, now you stayed the course. Oh my goodness. So when you pulled out of the market in the past, what market crash was that? And what made you pull out? What feelings did you have? What thoughts did you have that led you to pulling out of the market? But I'm glad you don't anymore because you've taken the Road to 100K course. Good stuff. Good to hear that. Tanya Brooks says she invests more. Tanya Brooks, you were in my Your Road to 100K course too, right? I remember seeing your name. Yeah. So look, my people in here don't play. Y'all not playing. So this should still be a good conversation because I want you to understand the pros and cons of both. But for those who are not aware, I do have the Your Road to 100K course. The link here is on the screen, moneycoachmalika.com/services/road to 100K. So a lot of the comments that you see are from besties that have taken this course, and that is why they're so confident now and they feel better about investing even through the market volatility. So yes, that course is available for enrollment now. So fear of losing all of my money made me run. Okay, so you thought the market was gonna bottom out. You thought the bottom was coming. Okay. All right, well, let's talk about it. Hold on one more. Should I continue? Should I continue to invest in what I already have or invest in something new? Well, it depends on your strategy and your goal. Do you have an investing plan or are you just investing willy-nilly? Do you have a strategy? Do you have your goal defined? If not, you need to take the course, Your Road to 100K, to help you gain some clarity on why you're investing, how you're investing, and what you're investing in. So, yeah, if you're just investing willy-nilly, that can lead to a lot of indecision and some lack of confidence. You're not sure what to do next. Yeah, there is no one answer for that. So I can't give you a definitive answer and tell you exactly what to do, because it depends on your goals, it depends on your risk tolerance, and it depends on the strategy that you're applying. So I would need to know more about what you're currently doing and what you currently have before we can decide what you should do next, or if you should do something new. It really depends. All right. She said she's willy-nilly. Yeah, we don't do willy-nilly when it comes to our money, creating money babies. Like I said, the stock market is not a game. It's not something you play. It's something we use, a tool that we use to create more money without work. So we don't do investing willy-nilly. So I would strongly, strongly recommend that you enroll in the Your Road to 100K course, so you can learn more strategy, so that you're more intentional about the way you're investing. It's a very, very short course. You can complete it in about 3 days. If you pace yourself about an hour a day, you can complete it in about 3 days, and you'll be investing with confidence in no time. I assure you of that. You can ask anyone in the chat that is taking it. But anyway, all right, let's get started. So a few of you have mentioned that you've pulled out of the market during a crash. Many of you mentioned that you stay in, and those of you that do stay in have learned from either my course or my group coaching program. So that's very, very good to hear. Well, let's talk about savings first. When you go risk off, when you go completely risk off, and you think the bottom is about to fall, what are the pros and cons to going completely risk off, pulling your money out, and just savings? I don't want to discount any feelings or thoughts that you have when you make that decision. I want to acknowledge those feelings that you have, because they're valid. What I hear from many clients that have pulled out of the market during historical market crashes, some of the most recent that come to mind is the financial crash of 2008. That's usually the one that comes up the most in coaching sessions when someone is new to me. The other most recent is the crash of 2020 during the COVID pandemic. A lot of clients mention that they fear losing their life savings, so they sell and they put their money to the side, or they put their money in a savings account. I had a client recently that told me she pulled out of the market in the 2008 crash, and she did not get back in for at least 5 years. And we talked a little bit about why she got out. And it was because she had other family members and friends that lost their life savings in the stock market, and that I imagine probably lost a lot of money in their retirement accounts because of some decisions that they made. I don't know the details of their decisions and their circumstances that led to the losses, but because she knew of those people's experiences, she wanted to avoid it for herself, and pulling out of the market gave her a sense of security. So that is one of the pros of going risk off and moving your money into savings. I wouldn't do it, but I can acknowledge why people do it. It gives them a sense of security. It makes them feel safe. It makes them feel like I'm not going to lose it all just in case the stock market bottoms out. My money is safe. I've taken it out. It is now sitting to the side. So for those of you who have gone risk off taking your money out of the market and put it to the side? Is that one of the reasons why you did it? Is that one of the benefits that you saw in doing that? Did it make you feel more secure? Did it make your money feel more safe? I want to acknowledge the pros of that choice, if that is a choice that you have made, right? I want to acknowledge that. I understand the emotions behind that financial decision. You know, I don't want you to feel horrible or think you're a terrible person or think, oh my goodness, investing is not for me. I did this thing in the past and I regret it now. I mean, but it is what it is. It's what you did. I want to make space and acknowledge that I understand why you did it. And Venus says yes. So it gave her a sense of security. It made her money feel like it was safe. Okay. Okay. If anyone else feels comfortable chiming in to explain why they went risk off. Hello, Miss Donna, VIP bestie. I see you in the house. Good evening to you. Hello, money babies. I'm in for the long term and shop for bargains. Yes, yes. And I read your comment, and Miss Donna is now in the Invest with Ease program with the Sister Circle Mastermind. And she left a comment the other day and said she was so happy. She was in the program and so happy she took the Invest with Ease course that's part of the program because it made her feel more prepared for what happened on Monday. I was so happy to hear that. Oh, Chanel, you didn't receive the notification. That's okay. We're just getting started. We're just getting started. What's up, Chanel? She's also another new member in the Invest with Ease program in the Sister Circle Mastermind. I see y'all. I appreciate y'all for being here. But yeah, both of them mentioned that they feel more prepared for what happened on Monday. Chanel said when she saw the market drop, she was like, there's nothing to see here. My besties are so confident now. I love it. I love it. But getting back to going risk off, pulling your money out of the market, putting it in savings. So if you do that because of the one or two pros that I can identify, it gives you a sense of security and it makes you feel like your money is safe. I understand. I acknowledge you. I see you too. Right. So now let's talk about the cons of going risk off during a market crash. Let's talk about some of the cons of going risk off during the market crash. And now I'm going to pull up some charts here. Ms. Greta, one of the reasons you love index funds, because you're already diversified. Yes, yes. So the cons of going risk off and pulling your money out of the market and moving it to savings. The most obvious con, number one, is even though you may think pulling your money out of the market and moving it into savings is keeping your money safe and preventing losses, when you pull your money out of the market, you're actually losing two times. You're actually losing two times. Number one, you're losing by locking in the loss you have experienced as a result of selling, right? So let's say your portfolio was at $50,000. And let's say the market crashes. And I'm using the word crash only because that's the word that most people recognize. It's the word that most people understand. And it's the word that most people use. But for my clients, you understand what a real crash is. And I won't go into that level of detail because we will be on here for hours. But I'm using that word because it's a word that triggers emotions, and it's a word that most people associate with the stock market. But for my financial besties, I'm not using the word literally for what it means. But when the stock market crashes, let's say your portfolio goes from 50,000 to 40,000. That's just a paper value until you sell. So when you sell and pull your money out, you've locked in a $10,000 loss. If you stay in the market Your portfolio value on paper went from 50 to 40, but the number of shares you own, the number of assets you own is still the same. And this is one of the reasons why I teach my clients not to view the stock market as a game. There is nothing you're playing. It's not like the casino in Las Vegas. So it's not just the numbers on the board. Investing in the stock market is about ownership. It's about owning assets, tangible assets, just like the house that you own. Or if you own multiple, the real estate property that you own, just like the car that you drive. Those are assets, tangible assets that you can see and touch. The stock market is the same thing. So many people treat the stock market like it's this phantom thing and it's not real. When you're investing as a true investor and you're focused on accumulating shares, those shares are a tangible asset that you own. And the number of those shares do not go down just because the market has crashed. Just the paper value goes down. The paper value of your house changes all the time too. The paper value of your car changes all the time too. If you go into kbb.com and look up the value of your car, I promise you it's not the same value that it was when you bought it, but you still own the car and you still drive the car. What you own has not changed. So when you go risk off and you sell, you are making that paper value, that paper loss, that's not really a real loss. You are making that paper loss a permanent loss. It becomes a realized loss. So you're losing already by locking in that loss. The second way you're losing is when you move your money to savings. Now your money is not keeping up with inflation. That's one of the things we're dealing with right now. Inflation is so high. Costs have gone up. What you pay for a gallon of milk today is not what you paid for a gallon of milk a year ago. So everything that you buy in your regular everyday life is more expensive. So with your money sitting in savings and not keeping up with inflation, you are inadvertently losing money and hustling backwards because your money is not growing fast enough to keep up with the rising cost of things. So you're actually losing twice. You're not keeping your money safe. You are actually increasing your risk. Psychologically, I can understand why you think you're decreasing your risk and you're protecting your money. But you're actually losing twice when you locked in your losses and now your cash value is deflated because it's not keeping up with the pace of inflation. It's not keeping up with the rising costs of the goods and services that you buy every day. Does that make sense? If this video is helpful, hit the like button. If this video is helpful, let me know by hitting the like button. That's how you can let me know that this video is helpful to you. Hit the like button for me. All right. I want to show you. Financial bestie Tamika. Y'all saw Tamika on the last video, last Friday. She's also a member of the mastermind. She said another con is missed opportunity. Let's talk about it. Let me get in my bag. Let me pull up my charts for y'all. Yes, good point, Tamika. I'm going to show you the missed opportunity that Tamika has brought to our attention. Okay. Now, when I pull up the charts, those of you who are not traders, those of you who are not familiar with technical analysis, don't worry. I will try to make this as simple to understand as possible. I'm getting in my bag, y'all. This is usually limited to my coaching container. Y'all better bring the likes, hit the like button, run up the chat so YouTube will know this video is fire. All right. Can y'all see my screen here? Can y'all see my screen here? Okay. This is a chart. What you see in red mean the stock market was down. What you see in green mean the stock market was up. Right now, I'm looking at a daily chart. I'm looking at a 1-year chart on the daily. So every candle you see here represents one day, right? I'm about to change this time frame to, I want to zoom all the way out. I'm going to change this time frame to a 20-year. This is a 20-year chart, and every candle represents a quarter. So every candle represents 3 months in a quarter. And I'm zooming out to 20 years because I want to go back to 2008. The 2008 market crash that most of us remember, because most of us are over 40, we remember the financial crash, the housing crash, all happened around this time frame here. Do you see my cursor circling this area here? Let me see if I can highlight this area here. You see all this red, right? So that's the area that we're focusing on in 2008. There we go. I want to do that. So the area we're focusing on, this is the crash of 2008, right? So it started in around October 2007, the last quarter of 2007, and it continued for over a year, right? It continued for over a year. So if you went risk off and pulled your money out of the stock market, one of my clients recently told me around this crash, she pulled her money out and she stayed out of the stock market for 5 years because she was afraid of losing money. Now, what did I say green meant? When the candle is green, that means the market was up. So from the prior close to the close of the new period, in this chart, every candle represents a quarter. So it represents 3 months. So although for an entire year the market went down during the crash that we all remember, a lot of our housing values went down, the market crashed. It was just a global worldwide catastrophe. We all remember that. Y'all remember the 2008 crash? Let me know in the comments if you remember this 2008 crash, right? Let me know in the comments. Y'all with me? So if you were like the client that I am remembering in this example, she pulled her money out because she was afraid. She thought she was keeping her money safe. She moved it to savings. I understand the psychological reason why she did that. But as Tamika pointed out to us, the third way you're losing money, especially if you are afraid and you sit on the sidelines for 5 years because you're afraid of getting back in. Look at what happened over the next 5 years. From 2008, 2009, 2010, 11, and 12. Look at what happened over the next 5 years. So not only do you lock in your losses, then you miss the opportunity to regain. So she sat on the sidelines for 5 years and missed out on all of this growth. And if you locked in those losses and realized the losses, then in your mind, you are associating the stock market with a loss, but it didn't have to be. And because you realized that loss, that led you to become fearful of the stock market. So it makes you hesitate getting back in. Now imagine you go years or a whole decade without getting back in. Look at all of this opportunity. You miss out. You locked in your loss down here. The stock market is now way up here. You missed out on all of this parabolic growth, right? You missed out on all of this growth. But here's the thing. Here's another thing I want to share with you. The other very memorable crash that we all remember is here. Look at this big old red candle here. Look at this big old red candle here, right? Look at this big old red candle here. Y'all remember this? I'm just going to tell you the time period that this candle is. Tell me in the comments. Tell me in the live chat what happened here. This candle represents January 2020. What happened here? I'm showing you how easy it is to read charts. So this is double duty. This is like a whole coaching session. I hope y'all are loving this. You better hit the like button if you do, because I won't do this again if y'all don't show me love. I won't do this again if y'all don't show me love. I usually do this in my coaching container, but I felt like going into my bag because I want to help my besties understand that the stock market is not a game, number one. And I want to help you understand that the stock market is not anything to fear. It is a tool where we build wealth. Yes, all of you are saying it. That is when COVID happened. You were able to read charts. What you're doing right now, you are reading charts with me. This candle right here is representative of the first quarter in 2020. This is COVID. This was the COVID crash. A lot of people pulled out their money during the COVID crash. Look to the right. Look to the right. What happened next after the crash? What happened next after the crash? So look at all this activity here. You were probably in the stock market. You thought everything was normal. You thought everything was fine. The market wasn't really doing anything. That was little tiny baby steps of growth. And then you get over here and you freak out. And the market really didn't go down that far, because if you've been investing long term, look, and this is why I zoom out and emphasize the importance of investing long term. If you've been investing long term, you've been investing way back here where the price was way down here. So once it got all the way up here, even when the market crashed, it didn't go all the way to the bottom. Even when the market crashed, you were still in profit had you been investing long term. So even with the crash, you were still in profit. But if you got scared and you pulled out of the market, you pulled out probably somewhere around here. Hold on, I'm going to put a line on the chart. You probably pulled out somewhere around here. That's when everybody was talking about it. That's probably when you first noticed the drop, right? You locked in that loss. That's loss number one. You went risk off. You put your money in a little savings account that was only earning you 0.02%. And then the very next quarter, what did the market do? This is April, quarter two. This is July, quarter three. This is October, quarter four. And it continued. Meanwhile, you're still sitting on the sidelines with your money in savings, earning 0.02%. The stock market went on a parabolic run. So as Tamika shared with us, the third way you're losing when you go risk off and pull out, you're losing opportunity. So if your portfolio was green and you were feeling good way down here, imagine how you would feel when your portfolio got way up here. And when the market crashed again, this was 2022. When the market crashed again, and again, I'm using the word crash really just to be triggering. But my clients know what crash really means. But when the market crashed again in 2022, that invoked more fear. And people who lost money in 2020 that didn't pull out, they was like, oh, I need to pull out, right? I need to pull out now. I'm pulling out this time. They pulled out here. But then what happened? You missed out on opportunity again. Right? So I want you to see and understand the cons of going risk off and moving your money to savings in a market crash. You think you're losing money if you stay in the market, but when you pull out, you're actually losing 3 times. You're losing by locking in your losses. You're losing by not keeping up with inflation, and you're losing by missed opportunity. That's not keeping your money safe. That's hustling backwards. Right? Before I move on to the next thought I want to share. Check in on the comments. What thoughts you have, what questions you have. No, ma'am. No, ma'am. Timing is not key. And everything I just shared over the past 30 minutes, you did not hear me say anything about timing. You did not hear me say anything about timing. What I do not do is teach my clients how to time the market. You try to time the market, you're gambling. You're gambling. If you win, it's pure luck. It's pure luck. You will not build wealth based on pure luck. You will not build wealth based on timing the market. You did not hear me say that word one time. It's about being consistent. It's about investing long term. And it's about having a strategy. When you have a strategy and you understand how to navigate the stock market, that will build your confidence to stick with your strategy despite the market volatility. Timing is not key. Timing is not key. No. Greta King, 2008 was a lot worse compared to 2020. Yet it was worse only in the sense of it took longer for the crash to end. But in terms of how much the market dropped, it was the same. The only thing that made it worse is because it was a slow drop. So it triggered more emotions. And I guess I could say also the other thing that made it worse was the climb back up was slower. With the pandemic, everything was fast. It dropped fast and it built back up fast. So I'm gonna pull up the charts again so you'll see what I mean. Pull up the chart again so you'll see what I mean. So I'll go back to 2008. Okay, so 2008. So it took over a year for 2008 crash to finish, right? So each candle is a quarter. And then when 2008 started rebounding, it took quite a, no, this is not what I want. So when 2008 started rebounding, it took quite a bit of time for the rebound to get, no, that's not what I want. I'm going to use I'll use a line here. It took quite a bit of time for us to get back to the highs. So it took several quarters for it to return back to the highs. That's what made 2008 feel like it was worse because it was slower. Whereas over here in 2020, the drop happened all at once. It happened really, really fast. And then we went on a very, very unusual parabolic run. So we got right back to the all-time highs, like almost the next quarter. So it happened really fast. But in terms of the amount that the market dropped, 2020 was probably worse. But what made it feel like it wasn't as bad is because of how fast it happened. Right? Right. And this is a very good comment. If someone was retiring in January 2020, it wouldn't have been so good for them. And I'm not picking on you, Tay. I'm not saying this to pick on you, but I'm just highlighting your comment because I'm sure this is a thought that a lot of people have. And it's not that I disagree with you. I just want to help you to reframe your perspective. And I'll show you what I mean. I'm going to show you the charts one more time. Okay. Show you the charts one more time. Uh-oh, where's my chart? Okay, there we go. Okay, so let's say you have been investing for your retirement. This is a 20-year chart. This is a 20-year chart and your comment was perfect. Okay, let's say you've been investing for your retirement. Let's say you started investing way back here in 2020. right? And you were planning to retire in 2024. You've been investing long term, which is what I recommend, not timing the market. You've been investing long term. And you started investing here when the market was, let's see, 109. This is the S&P 500, by the way. I don't know if I shared that, but 109.35. You started investing when the market was down here. This is, I'm going to make this red so you can see make it yellow so you can see what I'm saying. You started investing when the market was down here, and you've been investing consistently, whether the market is up, whether the market is down. Because when the market is down, you're buying on sale, honey, and you're just investing consistently. Let's say you're getting ready to retire around 2020, around 2022. We're going to go here. Your comment is, if someone was retiring in January 2020, it would not have been good for them. Do you mean to tell me your portfolio, when you started investing long term back in 2004, you've been investing 20 years and you were preparing for retirement in January 2020? By January 2020, your portfolio has grown from, let me pull up the trend. Your portfolio has grown from 107 to 483, which gives us, hold on. Nope, that's not what I want. Hold on. My wireless mouse is sticking here. Hold on. So your portfolio has grown from 107 to 110 to 476. That is growth of that is growth of 341 cents. 341%. You have tripled the value of your portfolio. Are you meaning to tell me if you were retiring in January 2020 and the market pulled back just 20%, are you telling me that's not good for you and your portfolio is up over 300%? The market pulled back 20%. If you've been investing long term, your portfolio is up over 300%. So tell me, in your opinion, what's not good? Tell me, in your opinion, what's not good? So while you may not have the whole 341%, but even with the crash, if you've been investing consistently and long term, you still have a 320% gain in your portfolio. What's not good about that? I still don't see the problem. So when people make emotional decisions because of a market crash, because they think, oh my goodness, all of my retirement savings are going to be gone, the market pulled back 20%. And as I told my client the other day, let's say you have $500,000 in your retirement savings by the time you're ready to retire. Are you going to need all $500,000 on the day you retire? The day you retire, you're going to need all $500,000 all in one day? No. And if you don't, why are you concerned about what the market is doing in this short period of time? If you need, let's say, 150,000 of it, the other 350,000 can stay in the market and benefit from the parabolic recovery that happened just a few months later. So you can still gain it back even if you are retiring in January 2020. You didn't need your entire retirement portfolio the day you retired. That doesn't mean you're going to pull everything out of the stock market. Your wealth is still growing even in retirement. I retired in May 2022. I've been retired over 2 years. My portfolio has grown and I haven't worked a day since May 2022. The day you retire, you don't need every dollar you have. Your money will still continue growing in the market. And a little 20% pullback, even a 30% pullback, is not going to wipe out all the gains that you have accumulated over investing for 10 and 20 years. Right? Again, I'm not picking on you specifically, Tay, but I highlighted your comment because it's a common thought that people have. It's a common fear that people have. And I understand it, so I'm not discounting the emotions, but I want you to reframe your perspective. I want you to reframe your perspective so you can approach the stock market in a more, I won't say logical because money is emotional. I want you to approach the stock market in a less fearful way. When you can see the growth, when you can see what the numbers mean, you have to crunch the numbers and put your emotions aside to realize how much money you still have in front of you and how much money can still grow. Right? Thank you, Dominique. You're welcome. You're welcome. Y'all hit that like button if this was good. Y'all hit that like button if this was good. Let me know. That's how you let me know this was good. Hit that like button. Yes. Like Tamika said, she didn't have to pay for daycare, so she had extra money to invest during the 2020 crash. Yes. Y'all hit the like button. So y'all let me know y'all truly rocking with me. If y'all want me to do this type of thing, I know I do my videos and I talk about money. I talk about investing, but I ain't never went into my bag like this before. This is usually for my clients. So if y'all want me to keep doing things like this, let me know. Let me know you like the content by hitting the like button. Yes. Tanya Brooks. Yes, time in the market is way better than timing the market. It's not about timing the market at all. You try to time the market, you're going to lose money. I promise you will. Time in the market is so much more important. You cannot time the market. You can try, but you're going to lose more often than not. You may get lucky sometimes, but you're going to lose more often than not. Yes. This chart, is it a chart of individual stock or a fund? This is a chart of the S&P 500. So I'm looking at the ticker SPY. This is a State Street ticker that represents the S&P 500. This is a spider fund. When I'm looking at charts, I like to use the spider funds because they have the most volume. So they show the most activity. And they, because of the activity, it helps me to see what's going on with the market a little better. But I can look at an individual stock if you want me to, but that's not really the purpose of this video. But if you want me to, because you're a VIP bestie, I'll do whatever you ask. I can do whatever you like. But let me see what else is going on in the comments here. Miss Gail. Hey, Miss Gail. Miss Gail was a guest on the channel too. If y'all haven't seen Miss Gail's channel, she was in the video we did on investing over 60, I believe. Investing over 60 is in the playlist on If You're New to Fabulous Financial, Start Here. And it's the last video in that playlist for our seasoned sisters, our seasoned besties over 60. But anyway, Miss Gail said, I keep my money separate. I have bill money, investing money, and emergency money. I like that, Miss Gail. We have started calling our emergency money our peace fund over here. with the financial besties. Another bestie gave us a good word for our emergency fund money to make it feel more peaceful. So it's our peace fund now. But I like your plan. I like the way you have your money structured. I don't mix the pots. I know that's right. So I don't get nervous based on what the market is doing because all bases are covered. Look, y'all better learn. Y'all better learn from Miss Gail. She done gave the blueprint. She done gave the blueprint. Yes. She gave the blueprint. Yes, yes, Ty. I see. So the losses aren't that substantial compared to the gains over time. Absolutely. I guess the nuance is the person had to have been investing long term. Yes, yes. So here's the other thing I want to show you. Actually, I want to show you two more points before we move on from the cons. We spent so much time talking about the negatives. I want to talk about some positive things too. But here's the problem with trying to time the market and trying to decide when to jump in, when to jump out. And also the problem with, I'm going to switch now to a shorter time frame. So I'm going to switch to like a 1 year, 1 day chart. Okay. So this is just a chart over the past 1 year. So from August 9th, 2024 to August 10th, 2023. So when you are trying to time the market, when you're trying to do short-term things and you don't really know what you're doing. Okay, so this is a perfect one right here. I'm just going to zoom in completely on this area. All right, so of course the green candles mean the market was up that day. So let's say this was a day in the market and you thought you was going to make some quick money. You thought, you were going to time the market and you were going to jump in real quick and make some quick money because you heard everyone saying the market is up, the market is doing great. You heard all of these people on social media talking about, yeah, it's going to go to the moon and all them crazy terms I hear people talking about on social media, right? It's going to all go to the moon. And you see that all the charts show in the green when you turn on the news and you decide to jump in, you want to time the market and you just started investing. You're not focused on the long term because you don't listen to me. You're going to do your own thing or you're listening to somebody else that say you don't need to invest long term. So you jump in here and you buy and you put some money in and then the next day it gap up and it keep going up and you like, oh yes, I'm winning because you think the stock market is a game. Then what happened the next day? And then what happened the next day? And then what happened the next day? When you have a short-term focus, when you are trying to make money fast, when you are trying to time the market, you will lose money. You will lose money. This is why the majority of traders lose everything within 2 years. Because you will lose money when you're focused on the short term. Until you put in your reps, and I mean lots of hours of reps. When you're a trader, you will lose more money than you gain because it takes time and hours of study. Our good sis Shalonda mentioned it when we first signed on. She's a trader. She is aware that she needs to put in her reps. In the beginning, when you're learning how to trade, when you're focused on the short term, you will lose more than you win. And when you are focused on the short term and you're just starting out and you have these gains here, the market is going to take it right back. And if you're emotional and you're investing with a short-term outlook, which is more so trading, and you want to jump out right here because the market is going back down, you're going to lock in that loss and you don't have a lot of range. You don't have a lot of equity. So your gains are going to be smaller because you didn't gain that much because this was such a short period of time. And then you gave half of it back to the market. So you don't have a lot of runway to lose because you didn't gain that much because you're focused on the short term. Right? So yes, Tay, back to your comment. You will need to invest long term if you want to be able to stomach the volatility in the market when there are large drops is still insignificant if you've been investing long term. If my portfolio is up 340%, do you think I care about a 20% drop? No. But if I'm trying to make money fast and I'm only focused on the short term, what I can make in the next month, yes, a 20% drop is really scary because I've only gained probably 15%. Right? So, yes, the difference is your time horizon. When you're investing long term, a market crash doesn't have that much of an impact, especially if you stay in the market and let your portfolio rebound. But the other point I was going to make, and then we'll move on to more positive things. When you lock in your loss, let's say the market drops 10%. Let's say your portfolio was $100 and you lock in your loss. Let me see if I can pull up a calculator. And you lock in your loss. There we go. I'm really in my coaching bag today. I don't know what came over me. Clients that actually pay me to do this, no worries. I'm not giving it all away. No worries. I promise I'm not wasting your money. But I'm just feeling like I need to help my besties stop fearing the stock market. But let's say your portfolio was $100, right? And let's say the market drops 10%. Right? Your portfolio went down to $90. Let's say you were scared and you locked in your loss. You locked in that $10 loss. You locked in that 10% drop. Here's the problem with making short-term decisions and the impact of locking in your loss. Let's say you decide to sit it out and you want to wait to see what the market is doing. And then when you hear everybody get excited about the stock market again, when you hear everybody talk about the stock market again, and then you get excited and you want to get back in, let's say you get back in, you missed the run up, you missed the opportunity that Tamika mentioned and that I showed you on the charts, and you get back in and the position that you were in is now $105. You only have $90. So now you got to add $15 just to get back in the same position. But that's not even the point that I was trying to make. That just came to me. But that's another impact of getting out and locking in your losses. But here's a problem. Let's say you are lucky enough to get back in, right, with this $90. Let's say you're lucky enough to get back in the same position. The problem with that is, even though the market dropped 10%, when you get back in with $90, you need more. You need more than 10% growth to get back to where you were just to break even. I'm going to add 10% to this $90. No. 100 minus 10%. You're at $90. And now we're going to add 10% back, $99. So when they say the market is down 10%, even when the market goes back up 10%, if you've locked in that loss, you're still not back where you started. So you're still losing. You're not even at the starting line anymore. You're still behind the starting line. So even when the market goes back up 10%, the same percentage range, you're still at a loss, right? And that reminds me of a question another client had recently. She said, Malika, I have my new portfolio set up the way that I've learned from you, and that one is doing great. But what do I do with all of my old stuff that I had when I didn't know what I was doing? Because that portfolio is down, but the stock market is up. Why is it still red even when the stock market is up? And it's the same concept I just showed you. So because she had been making emotional decisions and jumping in and jumping out and jumping in and jumping out, she was rebuying in at highs and she was locking in her losses. So it takes more growth in the stock market just to break even. And then on top of that, when you're buying at all-time highs, when you're buying, when you're buying when the market is trendy, when you're buying when everyone is excited, when everything is green, you're buying at high prices. It's not the Target red label, everything is on clearance, right? You're buying at high prices. So when you buy at high prices, and I'll pull up my chart in a minute to demo this for you, and this will be another demo I can do for you. But when you buy at high prices, in order for you to realize that gain, the market has to continue going up. It has to continue going up before you see the difference in your gains. So even though the market was up and the market was green, what we were looking at, her portfolio was still down because she had bought during the excitement. She jumped on the bandwagon. She was following the trend. She was following what people were talking about on social media. Oh, the market is great. This is the time to buy. That's not the time to buy. And she didn't understand why her portfolio was still down. But the portfolio we structured together, that one was good. She was excited about that one. But the things that she bought before she started working with me, it was still in the red. It's because she bought it at such an expensive price when everyone was excited about the market. When everyone is excited about the market, when you go into the hair salon, if somebody that don't ever talk about personal finance, don't ever talk about investing, if they putting you on to some game and telling you about a stock that you need to buy, I promise you, that is not a stock you need to buy. I promise you, that is not a stock you need to buy because the price is at all-time highs, and anything that's at all-time highs is going to take a break. Is going to pull back. It's going to rest. Okay, let me check in the comments. I know I said a lot. Oh, you're welcome, Greta. You're welcome, Miss King. Your father-in-law was newly retired. He had an emotional reaction. Well, now you can help your father-in-law understand that he's still in a good position and that he has not lost everything. Yeah. The media scares a lot of people for ratings. It's clickbait. And I'll be honest, full transparency. On YouTube, we have thumbnails, right? It's like the media headlines. We create thumbnails to get you to click and watch the video. It's the same concept. But some channels, I'm sure you've watched, where you click and you watch the video and it ain't got nothing to do with the thumbnail. The headlines on these news reports, they have a job. That editor has a job. That writer has a job. They want you to click the article and read. And people that don't click the article and read and that just makes decisions based on the headlines, they make emotional decisions. So that's why I tell my client, don't just rely on the headlines. The headlines ain't real. It's to get you to click. It's for ratings, to get you to read the article. Yes, Miss King makes a good point there. Yes. I drew him your janky. She said I drew him my janky version of the chart to show him how he had messed up. Okay. You're welcome. You're welcome, Miss Greta. Yes, I hope y'all are enjoying this. Yes, showing you the money. Showing you the money. Yes. Oh my goodness, I didn't even realize it's been a whole hour and I only talked about the negative. I guess we can continue next week. I don't want to hold y'all too long. Do y'all want to continue? Do y'all want to finish the other half of this conversation tonight, or do you want to hold it to next week? Let me know. Y'all let me know what you want. Yes, you love the bag. Yes, every now and then I'll pull out my bag for y'all. But if you really want the strategy, you got to come into the coaching program for the strategy. But that's why my clients are so confident with their investments, because they got the strategy and the plan. All of my clients have what I call a financial freedom plan. So we put together a plan for them, and it just outlines everything that they need to do to get from where they are now to whatever they identify as their goal. And it includes their investing strategy. And it also includes what they will do during the market crash. We document everything. Yes. Ms. Gail, you like that? I liked it too. Credit to one of the besties. Yeah, she mentioned peace fund. I was like, oh, I like how that makes me feel. Peace money. Yes, it brings me peace to know that I have some soldiers on the side, that I have some employees. Every dollar in Malika Incorporated works for me. They are my employees. To know that I have some employees on standby and waiting for life to happen, and I deploy them and they do their job to make me feel at peace. Yes. Chanel says she can never be a day trader. Never say never. You're in the Invest with Ease program. If you stay with me long enough, you might you might change that statement. You might change that statement. Tay, makes so much sense. Thanks for. Oh, you're welcome. You're welcome. You wish you started investing in the market properly 15 years ago. You know, you look like you're about my age. So, honey, if the Lord blesses us with another 10 or 15 years more, it's never too late to start right now. It's never too late to start right now. Yes. This is the true investment class. Yes. 20 years in the game, y'all. I don't come out my bag like this all the time, but 20 years in the game. I'm not playing. I didn't retire at 47 not knowing what I'm doing. I didn't retire at 47 by just talking smack. Well said, Malika. This is why I don't check my portfolio often, because I'll be tempted to make unnecessary changes, investing long term. So any noises that short term is none of my business. I like that. I like that perspective. When you're focused on the long term, the short term is just noise. Sis said that's none of her business. I like it. I like it. Yeah, Jackie says she loves this kind of conversation. Yes, yes. Dr. Dada. Dr. Dada said, yes, finish. Okay. Okay. I hope y'all hit that like button already. And if you're new joining us, hit that like button. And then you can watch the replay so you can see where we've been. It's helping you. Oh, I love to see comments like that. That's my objective. This is my goal. I don't want y'all to fear the stock market. The stock market is not a gambling machine. It's not a game. It's not something you play. It's truly a tool to build wealth. It is truly a tool to build wealth. And once you learn how to navigate it, and you may think it's a marketing term that I use because my program is named Invest with Ease, but I'm not BSing you. Once you learn how to navigate the stock market, you can truly do it with ease. You can truly do it with ease. You don't have to spend hours. You don't have to read the charts like I do. Reading the charts is just another data point for me, right? And the more data you have, the more confident you are in your decisions. But as you saw from Tamika from last week, she doesn't do everything that I teach in the Sister Circle. She likes to learn it and she makes mental notes of it and she takes her notes, but she doesn't do everything. But you can truly invest with ease and snatch your reparations from the stock market. You can snatch your reparations from the stock market, making money without exchanging your time or labor. To me, that's what I call ease. Coming on live, talking with you on YouTube, I enjoy it, but it's still work. And it's still work because it requires my time. But to have a tool, a source of creative money that does not require you to spend any time other than the setup, establishing your strategy in the setup. But after a setup, all you got to do is let it bake. To me, that's what I call ease. So to be able to create money with ease, to me, that's the ultimate freedom. And it's not even about building wealth and having a big portfolio with a big number. It's what you can buy with that money, the freedom. You're buying your time back. So if there's anything I can share on this YouTube that you tell me helps you to feel less anxious, I feel like I won. I won for the day. I met my objective in the video. So thank you for saying that. Thank you for saying that. I really appreciate that, because that's my goal every time I hit the live button. And Miss Gail says it's never too late. She's the one that's in the 60 plus video. She turned her life around. If you did not see that video with Miss Gail, I promise it's a good one. Go check it out. It's in the playlist of If You're New to Fabulous Financials. Miss Gail shared how she turned her life around in her 60s. In her 60s. It is never, ever too late. It's never too late. Yes, it's never too late. Yeah, you like what you're learning? Yes. So if you like what you're learning here on the video, imagine what you'll learn if you enroll in the course. Your Road to 100K course is for my newbie investors that do not understand how to navigate the stock market. So that's what this course is for. moneycoachmalika.com/services/road to 100K. This is for my newbie investors that fear the stock market, or even if you're already investing, but you're not really sure what you're doing. That is going to get you together. That's going to get you all the way together. For my more seasoned investors that want to grow their portfolio, that is what my Invest with Ease and Sister Circle Mastermind program is for. You can find that at moneycoachmalika.com/services/invest with ease. That's where I teach you the strategies. That's where I teach you some strategy in your Road to 100K too. But this is where you learn more advanced strategies to grow your portfolio. And you learn more about what I'm sharing now. What I'm sharing now is what I would typically only share in my Invest with Ease program with the Sister Circle Mastermind. The charts are a little too advanced for your Road to 100K. So I don't share any charts in there, but in your Road to 100K, I do demos, and I show you step by step how to invest, how to get started investing, and how to create your strategy, your beginner strategy. And I also give you very beginner friendly assets to invest in, so you can structure your portfolio and grow that to at least your first 100K. But Invest with Ease, that's where I get into my bag. That's where I'm pulling out all my tricks. So if you're a seasoned investor, join us in Invest with Ease. All of these links are already in the description of the video. But yes, I'm glad y'all enjoying it. Oh, you saw the video with Miss Gail? Yes, it was fire. Miss Gail was fire. Yes. Let's see. I'm going to spend the rest of this time just answering your questions. We will do a continuation. I don't know if it'll be next week. I think I already have a guest scheduled for next week. But we will do a continuation. I promise I'll share the other half. But I want to spend the rest of this time answering your questions since we've already been on for like an hour and a half. Can you look at an index fund? Sure. What index fund you want me to look at? I will take requests. What index fund do you want me to look at? Technically, SPY is an index fund because it tracks the S&P 500. Let's see. Bahan Alpha. Can't wait to see where we all are in 10, 20, 30 years. I know. Isn't that exciting? Just the thought of it. I'm looking for Qs. If you have a question, put a Q in front of it for me. If you have a question, put a Q in front of it for me, because y'all know I'm half blind and I don't wear my glasses when I'm on live. But the Q makes it stand out and makes it easier to find. I'm scrolling through the comments, looking for any Qs I may have missed. And if I missed your Q more than 30 minutes ago, if you posted a Q more than 30 minutes ago, repost it for me, because it may get lost in the sauce. But yeah, let's dedicate the rest of this time for like 15 minutes to Q&A. Y'all drop your questions. Drop your questions in the comments, and please put a Q in front of it. All right. I see you, Miss Greta. Miss Greta wants to look at FXAIX. I think that's a Fidelity mutual fund. I think that's a Fidelity mutual fund that represents the total stock market. FXAIX, if I'm not mistaken. Is that a Fidelity fund? Yeah, that's a Fidelity fund. You know what? And this is a great example for something I want to share with you. I'm really in my coaching hat, uh, in my coaching bag right now. This is a perfect example, something that you need to be aware of, right? So FXAIX, that's the ticker symbol that Miss Greta wanted me to look up. So this is a Fidelity mutual fund. This is a Fidelity mutual fund. And y'all see it just looks like little dots. It doesn't show a candle. And the reason why you only see little dots is because mutual funds are not traded throughout the trading day. Y'all remember the video I did where I explained the difference between, most people say index funds and ETFs. And I explained in the video that the difference is actually between mutual funds and ETFs because they both can be index funds if they're tracking an index. But the true difference is between a mutual fund and an ETF. What FXAIX is a mutual fund. And one of the primary differences is mutual funds are only bought and sold at the end of the trading day. You need activity throughout the trading day in order to create a candle, right? But because mutual funds are only bought and sold at the end of the trading day, so it only shows the dot, and that shows the price that it was when that market day closed. So it's hard to do charting on mutual funds because there's no trading activity. But so we can see or try to see a candle, I'm going to zoom out. This is a 1-year daily chart. I'm going to zoom out to the 5 or 10 year, and I'll do a monthly chart to see if it'll show us a candle on the 5-year monthly. So you see now we can see a candle because it's not activity throughout the trading day, but on this, because it's a 5-year monthly chart, every candle represents an entire month. So this is activity at the end of the trading day over an entire month. But I'm glad Miss Greta asked me to pull this one up because I want you to see another point of reference so you can understand the difference between mutual funds and ETFs, not index funds and ETFs, mutual funds and ETFs. They both can track the S&P 500, so that both makes them index funds. But mutual funds are only bought and sold at the end of the trading day, and that's why it was only a little dot. So I had to zoom out. When you zoom out, you get a bit bigger picture of the market. So now these candles represent a full month, okay? So what we are seeing here, FXAIX, is the total stock market. So it's still the same thing as the SPY that I had up. The SPY is the S&P 500. FXAIX is actually the whole. I think this is the whole market. Is this the whole market, Ms. Greta? Let me double check. I don't know every ticker off the top of my head. I know it's a Fidelity fund, but I can't remember if it's FXAIX. Oh, this is the 500. So this is the S&P 500. So it's not the whole market. It's just the S&P 500. So this is actually the same chart as the SPY. It's just a different ticker symbol. So this ticker symbol was created by Fidelity. SPY was a ticker symbol that was created by State Street. So it's just a different fund manager, right? But it's pretty much the same chart. So we'll see right here. So this is March, January, February, and March 2020. So it's the same market activity that we saw. We were looking at the chart on the quarterly in the last one, so it was just one big chart. This is a monthly chart, so we see the months individually. This was the COVID crash right here. This was the COVID crash, and right here, this was the 2020. And again, I'm being facetious using the term crash, but this is the market did crash here. This was more of a correction, right? But this is January, February, March. This is a COVID crash. And you see, if you pulled out, if you got scared and you pulled out, you would have missed all of this opportunity, right? You would have missed all of this opportunity. And some people that didn't pull out here, but then the market started pulling back again here, they got scared and pulled out here because they thought this was going to happen again. And this is a problem when people listen to social media or make financial decisions based on what they hear in social media, and they make financial decisions based on the news articles and the news headlines, because the headlines here were probably very, very similar to the headlines here. So if you didn't completely freak out here, you probably freaked out here because you thought this was going to happen again. And if you pulled out here, then you missed all of this. And then when 2020 happened and the market corrected, if you pulled out here, then you would have missed all of this. This has created a new all-time high. But if you pulled out, you would have missed this new all-time high that's way up here. So even though we got this little gap down here and the market is a little wonky right now, over the month, because it's a mutual fund, so we're only looking at a month at a time, over the course of the month, August is still green. Even though it's down from its all-time highs. But if you look at it, the market is still green. And if you started investing way back here, a lot of people got in the market and started investing during COVID, which I think is a wonderful thing. I just want you guys to learn how to invest properly and stop playing with your money like it's a game. But a lot of us in our community, a lot of Black people started investing around COVID, which is great. But learn how to invest properly so you're not pulling out the market every time this happens. And when you stay in, even when the market pulls back and do the wonky thing like it did on Monday, had a global sell-off. We're still at all-time highs. We are still at all-time highs, y'all. So don't let short-term volatility influence your financial decisions. I want you to approach the stock market with a long-term mindset. I want you to approach the stock market as a wealth builder, not someone that's gambling, trying to make money fast. We are here in Fabulous Financials. We are focused on building wealth. And building wealth means accumulating our assets, right? We're accumulating our assets. Do you do consultations to determine which course would be best? Sure. Well, I can give you some insight to help you decide yourself. So your road to 100K, that's for beginners that know nothing about the stock market. That's for beginners who know nothing about the stock market or fear the stock market, to help you understand how to navigate the stock market, to help you understand a beginner-friendly strategy to structure your portfolio or to restructure your portfolio if you already have one, but you're not really sure what you're doing, right? And that your road to 100K will give you the foundation you need to build your portfolio up to 100,000, right? If you already are in the stock market and you're pretty confident with what you're doing, but you want to learn more, you want to grow more, if you already have a portfolio that's already 100,000 and you want to grow that beyond 100,000, then the Invest with Ease program and the Sister Circle Mastermind would be for you. So I hope that helps generally. But if you do want to talk one-on-one, yes, you can schedule a one-on-one private session with me, private discovery session. We can talk about your financial concerns and your goals. And we can talk about like your learning style, what your preferences are. And then I can suggest which of the programs may be best for you. And it may not be one of the programs. If I find that, based on what you share with me, and I learn that you prefer to work with me one-on-one, or you just don't care to be in groups, you prefer to keep your finances private, and you just want to learn just from me. I do have a private coaching program. I don't usually share it. I don't usually market my private coaching because my private coaching is a substantial investment, and it's also longer term. Right? So depending on your goals, depending on your learning style, depending on your preferences, sometimes I suggest my private coaching program. But if you're not sure which of the group programs are for you, either the Your Road to 100K, the course that also has a community on Facebook. I don't do continuous group coaching in that because that's just the beginner level introduction, or the Invest with Ease program where I'm actively involved in almost every day in the community. And then we do meet once a month in the Invest with Ease group coaching program with the Sister Circle Mastermind. So if you want to have a conversation so you can decide which one is best for you, and if you need more information about either one of them, then yes, you can schedule a private discovery session with me at moneycoachmalika.com/schedule, and we can sit down and talk privately one-on-one to determine the best strategy for you, the best approach for you. Okay? You're welcome. You're welcome. Was this a market crash or a market correction? You mean what happened on Monday? I'm assuming you meant what happened on Monday. That's a very good question. I'm going to answer your question with a question, because the fact that you ask in that way, that lets me know that you know the difference. I know my clients know the difference. So I'm going to show you, I'm going to feed you some data, and I'm going to show you how to look at it on the chart. And then you can tell me if it was a crash or a correction. So when you're looking at a chart, shorter time frame, so this is an hourly chart, it shows the aftermarket activity. So even though the US stock market is closed, the stock markets around the world are still going. So this is what I look at when I'm charting or when I'm trading. And especially me being in Asia right now, I look at the Asian markets. So everything in gray are after hours markets around the world after the US stock market closes. So this was Monday. No, this was August 1st. So Monday was August, what was Monday's date? August 5th, August 5th. So let's find August 5th. I'm going to go up to a 4-hour chart, so it's not so much activity. Zoom in here. I'll zoom in here. So this was August 5th was here. Okay. So August 5th started here. August 2nd was Friday, and August 5th was Monday. All right, so we're going to zoom in here. Okay, so this is August 2nd. So what you see in black is the US stock market activity. What you see in gray is after hours market activity. And I have zoomed down to a daily chart, and each candle represents like a half of a market day. This is a 4-hour. These are 4-hour candles. Again, what's in black is the US stock market. What's in gray is aftermarket activity, right? So what happened on what happened on Monday kind of started on Friday. This is August 2nd. You started seeing a little bit of drop on Friday, right? And then Monday is here. It looks green, but it looks green because once the market opened, it started going up, but it went down because of what happened around the world. So it gapped down. And I'll show you what I mean when I say gap down. So you see how the market closed here, and then the market didn't open until down here. So all of this activity caused the gap that you wouldn't typically see unless you're looking at the global markets around the world. So I'm going to close this up to a daily chart. So this is the gap. This is the gap between Friday, August 2nd, and then Monday, August 5th. So this gap right here is what I'm referring to when I say the market gapped down. But you wouldn't see it if you were only looking at the US market. But when you look at the global markets, you see all of the activity that went on around the world while you were sleeping, right? You see that same gray area that I marked there? That's all the activity that goes on around the world while you're sleeping, right? So I share all that to say, let me answer Sister Girl's question. All right. So she's asking, was that a crash or a correction, right? So I'm going to put on my trend line here. So the stock market closed down on Friday here, and it opened here. So you see my trend line? So between 2 days, crap. between 2 days, 2 bars, the market was down 3.92%. Y'all see that? The market was down 3.92% between Friday's close and Monday's open. So it's 3.92. Wait, was I sharing my screen? It don't look like I was sharing my screen. Did y'all miss that? Oh my goodness, I was sharing all of that. And y'all, gosh darn it. I'm sitting here sharing and y'all couldn't even see my screen. Gosh darn it. I'm not going to go back over everything I was saying. I'll just do some quick cliff notes. I'm so sorry, y'all. I done marked the gap and everything. Wasn't showing y'all anything. I'm so sorry. Anyway, so what I'm showing you is where the market closed on Friday, August 2nd, and where the market opened on Monday, August 5th, so that I can answer the question, was this a crash or correction? So I'm using my trend line, starting from where the market closed, and I'm pulling it down from where the market opened. And it shows a difference of about let's round it up, about 4%, right? Because I'm not marking it imperfect spots. But you see 1 day difference, 2 bars, the difference between the two, the difference between my trend line is 4%. So let's just use 4% as a clean round number. So the market was down on Monday by 4%. So you tell me, if a 4% drop, is that a crash or a correction? You tell me. Which one do you think? I'm so sorry, y'all. My bad. I wasn't looking at the comments. I was looking at the charts. We'll do another video one day. I'll go in my bag again. One day and pull up the charts. But I won't go into all the detail I was sharing, but you get the gist of it. So this gray area here, I'm showing you where the gap down was between the 2 days. And what you didn't see was how I can see all the activity that happened around the world. But yeah, so this is where the market gap down, and it's a difference of about 4%. So do you think that was a crash or correction? Was that a crash or correction? Is that a crash or correction? Let me know. And sis, if you answered, I don't remember who answered the question, but whoever answered that question, I especially want to see your response. All right, next question. Does it have to be 100K USD, or would other currencies like CAD work? Other currencies will work. However, a lot of what I teach is specific to the US stock market. So if you are able to take what you learn about the US stock market and apply it to your market, you will have to be able to understand the connection, because I don't understand your market and I will never, ever want to imply that I do. So that's one caveat, that everything I teach is based on the US stock market. And when I'm teaching wealth building strategies, I'm teaching based on the US tax system, and the US wealth preservation system that we have here. So I don't know if that would apply to you, but if you understand how to apply it to you, then that is something you could take and use it to your advantage. But I don't convert anything to anything that's going on in Canada. But if you would like to join the program, if you think you can learn from me and apply it to the way things work in your country, then CAD would work in terms of meeting the criteria to join the program. Absolutely. But I don't know the value that you would get from it if everything I teach is based on the US stock market system and the US financial system and the US tax system. So just consider that, right? But if you do have 100,000 in your portfolio based on CAD and you want to join, then yeah, you would meet the criteria to join the Invest with Ease program in the mastermind. Oh, sister, she's a money coach too, and she's very impressed with my efforts here. Good to hear that from a colleague. Thank you. Thank you. Thank you. Yeah, Jackie, I was sharing my screen. I messed up. I'm sorry, y'all. And I wasn't even reading the comments. But let's see. But we're back on track now. We're back on track now. Okay. So I see some of you are saying it's a correction. Okay. Some of you are saying it's not a crash. Okay. Some of you are saying that's a market correction. Mm-hmm. Market correction. Market correction. Tay is saying sounds like a correction to me. Imagine all the headlines saying it was a crash. My job here is done. My job here is done. Market correction. Market correction. Shalonda, mild correction. Yes. Yeah. You answered your own question. See, I just need to guide you. I just need to show you how to read the data or show you where to find the data, and you can answer your own questions. This is a lot of what I do in my coaching program. I just guide you to the information. And a lot of times my clients, they know the answer. They just need validation of what they're looking at. Like you, Miss Shalonda, I'm talking to you. I know you know what you're doing. You probably just need a little validation, but we can work on that. We can work on that. Oh, you're a male. Okay. I got some male besties too. All right. You're welcome. You're welcome to join us anytime. And thank you for the compliment. Thank you for the compliment, because investing is such a male dominated field. And, you know, a lot of experts make it seem so complicated. And one of my objectives here on my channel is to help my sisters know it's not as complicated as the finance bros make it seem. I can teach you how to do this. If you trust me, if you're open-minded, if you're willing to set aside what you think about the stock market or what you heard from somebody else that you follow on social media. If you come into my program with an open mind and you trust me, the same thing I'm sharing here, I can pour so much more into you, so much more, because we have more time together. I promise I can teach you how to navigate the stock market without fear, even during market volatility, because it's not complicated. So so to hear a male colleague that's also a money coach, that also I'm sure he's an investor too, to say he loves the way I present things, he thinks I'm doing a good job, that's a great honor. That's a great honor. And you're looking for more women who invest? That's funny. Why are you looking for more women who invest? We out here. And it's not hard. It's not hard. So again, if you want to learn more about how to navigate the stock market, if you want to learn more about how to invest and grow your portfolio, right? I have my two programs here. I have my Your Road to 100K for beginners that need to learn how to navigate the market, how to establish a beginner-friendly strategy. I even give you the ticker symbols of what to consider investing in, and I show you how to research it. I take you step by step to show you how to build your portfolio. And you can take that information and grow your portfolio to 100K with just that information from the course, right? And there's also a Facebook community with everyone that has taken the course. I peek in there every now and then, but I do not do ongoing coaching. My other program is Invest with Ease with the Sister Circle Mastermind. If you already have a portfolio, you're already investing, and you want to learn strategies on how to grow, you want to learn more techniques like what I've shared today, that's where you will learn more in Invest with Ease. That also has a course too. That course gives you more of a foundation to show you how to restructure your portfolio so you can actually grow the wealth. And then in the group coaching sessions, I'm in my bag like this, right? I'm in my bag like this. So the links are in the description box. I would love to coach you and help you grow your portfolio, help you to become more confident as you're navigating the stock market, and help you make the money babies. Make the money babies. So So yes. Good. Oh, Chanel, thank you. She says she loves the community. Yes, thank you. And no, ma'am, Shalonda. Look, no, ma'am, I will not get off your neck. I'm your coach now. And by the way, once I'm your coach for life. I'm following you. I'm following you. I'm all in your business. I'm looking at everything you post on social media. Once I'm your coach for life. And I'm going to love on you, but I'm also going to correct you when I see you doing something that's counter to what you tell me your goals are. And I'm also going to stay on you when I know you have the potential to do what you say you want to do, but you just need a little push. Just need a little push because I know you got it. I know you got it in you. I know what you have done. I know the courses that you've taken. So I know what you're capable of. And I'm not going to let you short yourself. I will not let you short yourself. All right. So if there are no other questions, let me see. Uh-oh. My screen is freezing. Is my internet locking up in this hotel? Let's see. Hold on. Maybe I got too many things open. Maybe I had too many things open. But yeah, if there are no other questions, we will continue next week. I have had you all on long enough. We will continue next week with maybe not next week because I have a guest scheduled for next week. But if she's not able to show, we will continue next week. And if not next week, the week after that. But yes, if you enjoyed this video, if you found the video helpful, smash that like button. Smash the like button and share the video with other women investors. I thank you so much for watching. I thank you for spending this time with me. This was a little longer than usual, but I appreciate you for being here. So until next time, go and snatch your reparations out the stock market. There's nothing to fear. When the stock market crashes, when it's down, when it corrects, that's an opportunity to buy more because it's all on sale. So snatch them reparations, sis. The money is there. Make the money babies. But also remember, money is just a tool. Freedom is the goal. All right. Bye for now.